Hello and welcome to an FX Times Daily Forex News Recap. I'm your Chief Market Analyst, Nick Nassad. It's Friday, October 29th, and today we're going to take a historic look back at the Euro-Dollar pair as we head into next week's FOMC Quantitative Easing 2 meeting. Here we are in our current rally. We see since June we went from 120 all the way up to around 140 in the span of these last few months. Now, if we zoom this pair back and we take a look at some history, way before even the crash of 2008, we could see that during the time when the global economy was doing very well and we had plenty of risk appetite, we see the euro gaining due to its natural interest rate advantage, and we hit a high of around 160. So we can tell that during the regular environment pre-crisis, that during risk appetite, we saw the euro gaining on the dollar. Now, we did have the financial crisis in 2008, and we see that it was a dollar gaining very strongly all the way back to 125 as we had a flight to safety and safe haven, and it was the greenback and U.S. Treasuries that were the preferred destination. So then we came to the turn of 2009, and we had the Fed drop to zero interest rate policy. We had loose monetary policy in the U.S., and that way the euro bounced back up, but right after we still see that safety was key, and investors and institutions wanted the U.S. Treasuries and U.S. dollars. So here in March we get to the point where we kind of into the environment we're in now, where U.S. is close to zero interest rate, Europe is around 1%, and we have the economy is a little bit in shambles. So with loose monetary policy, we see a carry trade pick up again, and when there are periods of risk appetite, so we saw stocks finally rebounding, we see it's the euro gaining against the dollar, and we see that throughout most of 2009 as we get to December and we hit 150. So this is pretty similar to what we saw prior to the crash in 2008, where the euro gained as equities gained and risk appetite returned. Now we come into 2010 and we see the euro falling out of favor again, dropping sharply from 150 all the way down to 135, here as a result of the sovereign debt crisis in the eurozone, Greece, Spain, Ireland, Portugal. So this was a very rough time for the euro, but there too we saw all the countries come together, pass a 1 trillion stabilization package. So here was the aftermath and the deepest part of the sovereign debt crisis. We fell all the way down to 120. But since then, we've seen it was the U.S. economy and quantitative easing that was the major theme, and we have moved back in favor of the euro over the greenback. And the euro sort of has gotten its act together, and we've seen these two sharp swings, June to August, and then September to October. And now the question is, do we rise above this level, head to 145, 150? Let me clean this chart up a little bit. If I zoom into the most recent part of this euro-dollar daily chart, and here we're looking pretty much September's and October data, we see following this strong rally in September, mid-October, we're moving sideways and consolidating. So following this consolidation, I think we're going to get some clearer idea of what to expect from the Fed, and overall, quantitative easing, though, might not be as big a package as the market expected, is still dollar negative. And in the long run, if we have the global recovery continuing and we have this cheap money that it can be borrowed in the US and it needs somewhere to go, it's going to go to higher yielding currencies, and the euro is a higher yielding currency than the US dollar right now, and with the economy there looking a little bit better, the trend is that the euro will gain on the dollar in that environment. Also, we can have that same scenario, except the US economy is not following in with the recovery of everybody else. So that'll actually put extra pressure on the greenback, and so again the euro should gain. So for instance, if non-farm payroll is worse than expected, then that would be dollar negative and would be a good reason for why the Fed is undertaking its quantitative easing program. Now, the one thing that could push this pair back down could be another blow up in the sovereign debt situation in the eurozone. I don't think that's very likely. Or that we have some other risk event that increases risk aversion, flight to safety, and in that case the US dollar would gain. So while there are plenty of landmines laying around out there with the way the financial markets have been over the last few years. The data has been getting a bit better in the Eurozone, and so the next move for this pair, as I see it, is a break from this consolidation pattern and a move in favor of the euro. We could have a very dovish FOMC in which they propose a very small quantitative easing package, and that could catch the markets flat-footed, and we could see then a rebound further by the greenback. But again, I put that scenario as less likely than the euro breaking out to the top side in this pair. Today's US GDP data doesn't really shift the fundamentals one way or the other in this pair. It's kind of what we expected. We did see some better than expected consumer spending, which is a positive, but overall that was priced in around 2% growth during the third quarter. Annualized pace of growth during the third quarter. And so next week is key. We're going to see that FOMC meeting. We're going to get the details straight from the horse's mouth. And following that, we'll see traders have more conviction if they want to see to move this pair, to the 145 level, say. So I'm looking for that scenario to play out in next week's trading. Obviously, we have to monitor what happens, as things can always change and develop. But if we follow the clues that the Fed has left us, it seems we are going to get the middle of the road quantitative easing package, and it's going to be a dollar negative event. So tune back to fxtimes.com on Monday, and we'll see how this pair develops. And that wraps up today's broadcast and our coverage of the Forex market for this week here at fxtimes.com. Watch more of our videos at our FX Times YouTube channel. At fxtimes.com, you'll also find other news and analysis, more fundamental and technical videos, education, and live events. So till next time, thank you for watching and have a great weekend.